Hello, everyone. Good morning and welcome. We're looking at the tax laws and you, and we're very, very excited to have you join us. This is brought to you by Oxygen X Africa, and what we're looking at today is breaking down every myth surrounding tax laws in as easy to understand language as possible, because there's been lots of confusion surrounding the tax laws. So I just want to welcome you and say that today will be worth your time. Our goal here at Oxygen X is to ensure that by the time you're leaving this session, you understand properly just how these tax laws affect you, your businesses, how it affects your finances, and also it will guide your investment decisions. Whatever questions you have, we'll be glad to answer them, as we have very seasoned panelists who will be bringing you the details on these tax laws. We already have questions that some of you have sent in before now, which we'll kickstart the session with. But thank you once again for joining us today. I just want to interact with a number of us, so if you can, please drop your name and where you're watching from in the chat box. It will be great to see you and see where you're coming from and just give you a shout out. But first, my name is Olive Emodi. I'm a TV host with News Central Television, a lawyer and a businesswoman very interested in understanding how these tax laws affect me as an individual and also as a business. So it will be great for you at this point to let us know where you're joining from. Give us a like, react with an emoji, tell us your name, your business name, where you're coming from, what your questions are. We have the Q&A bar, so please feel free to drop a comment in the Q&A bar. We want to make sure that we do justice to this topic in a way that makes everyone feel seen, heard, properly understood. I did a poll. All right, I can see your comments. Thank you. Keep them coming in. Damian Uzozie from Ibadan. Great to have you here. Thank you. And you can also tell us what your business is. It will be great to, interact with you and your business. Good morning, Joseph Okoi, watching from Egbeda, Lagos State. Thank you very much. We have an anonymous attendee. Tell us your name and your business name. That's okay. But his or her business name is Soul Food Avenue. Thank you very much for joining us this morning. Keep the comments coming. Let's give a few more shout outs while we enable our chat. We're starting in a few minutes, but please keep your questions coming in. Thank you. Thank you once again for joining us. We are officially starting now. We are bringing the tax laws anew. And this virtual event is brought to you by Oxygen X, which is a digital lending consumer. It is a digital first consumer lending business that's committed to unlocking financial possibilities for every one of us. And we're going to share with you detailed explanation of what we do as we proceed. On the 1st of January this year, the tax laws were officially, the implementation of the tax laws officially kicked off. And a number of people began to ask, how do these laws impact me? How do they impact my business? And people, there was a running joke of how people would put descriptions like, this is Ajo money, please do not touch. And you would wonder if that is enough to protect your business. Our goal here today is to ensure that we dissect it, we remove the myths and the fears concerning the tax laws, and that you're able to understand how this affects your business and how it affects, you as a person, your finances. And we brought some very seasoned panelists who will be moderating this or facilitating this conversation. So please allow me to introduce to you Stanley Onuorah. He is popularly known as Online Banker. He's an economic analyst and fintech advocate with over a decade of experience in banking and finance, having worked with top institutions spanning commercial banking, microfinance and development finance, He specializes in financial empowerment, business development, and financial inclusion through digital media. Through the online banker platform, he merges his financial expertise with global insight, helping individuals, entrepreneurs, and corporates break down policies and general finance-related topics to enable them take advantage of economic opportunities while staying compliant. Please give a clapping emoji. I can see the emojis. Keep it coming as we welcome Stanley C. Onuorah, popularly known as Online Banker. Hello, Stanley. Good morning. It's great to have you here.
Good morning. It's good to be here.
Good to be here with you, Stanley. I will look forward to speaking with you in a moment. But Stanley's not going to be doing this alone. We have our next moderator, who is the co-founder and CEO of TaxStream, an AI-powered tax compliance solution built for African businesses. He's a couple 9 years of extensive experience spanning taxation, mergers and acquisitions, finance, and general corporate advisory. He has a proven track record of providing strategic advice on high-profile, complex local and international transactions. His career trajectory includes roles as senior associate at Udo, Udoma, and Bello Osage, and in the deal advisory and M&A tax unit of KPMG Nigeria. And in recognition of his potential, he was seconded to Latham & Watkins in London in 2024 through the prestigious International Lawyers for Africa flagship secondment program. He actively shapes the legal landscape as the secretary of the Taxation Committee of the Nigerian Bar Association section on business law. Please, with another applause, join me as I welcome our next panelist, Kelechi Ibe. All right, Kelechi, can you say hello to us? Hi, how are you?
I'm good. Hello, Olive. Hi, everyone.
All right, good morning. Okay. Without further ado, Kelechi and Stanley, let's get into the conversation proper. But before then, for those who are just tuning in, my name is Olive Emodi. I'm a TV host with News Central. I'm a professional compere, and I'm very, very excited to be moderating this conversation. A few housekeeping rules just to mention that we're recording this conversation, we're recording this event, and we, of course, by accepting to be a part of this event, we want to assume that you understand that this will be filmed and you've given your consent by virtue of doing that. Also, we have a quiz. We do have giveaways that will be coming up shortly. And there's a short quiz to enable you get your gift. When filling the questions or the answers to the quiz, please make sure you use the name that you used for your registration. And much later, we'd like to appeal to you to please fill our poll, as that will help us collate, your feedback and be able to do better and present better value to you next time. Now let's get into the conversation proper. Kelechi and Stanley. I'll start with you, Stanley. Stanley, there's been a lot of fear, a lot of misconception about the tax laws. I did a poll on my social media and I asked people, do you really understand the implications of the tax laws on you and your finance? And the majority of people said no. Stanley and Kelechi, starting with you, Stanley, should we be afraid? Should we be worried?
You shouldn't be worried. The thing is that for a lot of people, if you've read the tax laws, you've read the old tax laws, so I'm sure Kelechi would speak to that too. You notice that there are just a few tweaks, and I feel like it's more of an awareness thing, where people are now aware that they ordinarily pay tax. So even people that have been paying their deductibles from their workplace now know that they've been paying tax. They've been paying that tax, some for 10 years, some for 15 years, some for 20 years. It's just the awareness now that is out there that is a significant change that we are seeing. I like the awareness that is out there now, so people can hold the social contract that exists between the government and the people. They can hold the government arm to say, oh, you are taking some money from me, or you've been taking some money from me, and they can hold them to account. But there is really nothing to fear.
All right. Kelechi, are you seconding the motion?
I do agree that a lot of what has happened lately has just been awareness. And rather than being scared, I think people should just seek to get knowledge, get to understand better what the obligations are, what they need to do. And I think that's why sessions like this exist. So yeah, there's no need to fear, just get knowledge. And they say knowledge is power. So if you have the power, why are you afraid?
Okay. Thank you, gentlemen, for telling us and allaying all our concerns and our fears and letting us know that we have nothing to fear. So let's start with the individual first and talk about the implication of the new tax laws on individuals before we go to SMEs and then we go to those who are running their companies. as an individual, what is the implication of the tax laws on my finance as a salary earner? I'll start with you, Kelechi.
Okay, as a salary earner, again, it depends a lot on what your organization had always been doing. If you worked in an organization that wasn't deducting taxes from your payment and they want to start to comply now, then you would certainly see a reduction in your take home, because I'm aware that a lot of companies were not deducting taxes for employees, and it's looking now like the government is shining their light and the torch on those kinds of companies. And so you'd see that a lot of employers will start complying now. So you'd see a reduction in your take home because your company now wants to start charging taxes. And it's not necessarily because the tax laws have sort of increased your taxes. It's just that your employer now wants to start complying. But if you work in an organization where your employer used to deduct taxes, but then they want to just continue, I have found, for my own analysis, that you need to hit certain income thresholds to actually observe an increase in your tax, your tax band, or the monthly tax that you pay. I did an analysis on my YouTube channel one time, and I compared someone who earned 15 million naira annually in 2025 and someone who earned the same 15 million naira in 2026. And when I did the tax calculation, it showed that the person would be paying less taxes in 2026 than in 2025. The person would take home about 15,000 naira more monthly this year than last year. And it goes to show that there's been a lot of misinformation around the tax. I mean, your taxes will increase. It's not necessarily the case. What I can say though is that if you earn more, if you start earning like around 25 million naira gross a year, then you can start to see slight increases in your monthly taxes, which means your take home would reduce. And as your income keeps increasing, you'd see that your take home will be reducing, your taxes will be more. And so Nigeria operates a progressive tax system. So the more you earn, the more taxes you would pay. So I think that's that was my response, Olive.
Start weeping at this point, like, hey, is it a crime to be making more money? But for the salary earners who, if your company, let's assume that the company already paid tax or pays taxes even before now, what would the person need to do to ensure that their documents are in order? Because there's also a fear that after paying taxes, after the company pays taxes, they also will still be required to pay taxes from what's in their account. Those are some of the misconceptions that we've heard, and I'd like you to clarify that.
Okay. Good question. So the way the Nigerian tax system works is if you work in paid employment and your tax has been deducted already at source by your employer, and you've been paid your salary net of taxes, you don't have any other tax to pay on that income. That's on your salary, your bonuses, whatever you earn that has been taxed. You don't have any other tax obligation on that income. You can do whatever you want to do with it. You can spend it. You can transfer it to your other accounts. You can invest that money in another instrument. You can do anything as long as that money has been taxed before. It wouldn't be taxed again, right? But I need to give broader context, because I think the misunderstanding is that a lot of people do not understand that beyond your salaried income, there are other kinds of income people earn, right? So you have a full-time job that pays you a monthly income, but you also have some side gigs, where you do consultancy work and you get paid. Those income streams are not captured in your monthly salary. So it means that you're not paying taxes on those ones. And under Nigerian law, actually, you're required to disclose any other income you've earned outside of your employment income. You're required to disclose maybe dividend income if you had shares and your company paid you a dividend, interest income if you lent someone money and they paid you an interest, or you invested in debt securities and you got returns on those consultancy fees, or any other income stream. You have an obligation as a Nigerian person, resident in Nigeria, liable to tax in Nigeria, to disclose your income, because Nigeria operates something called the self-assessment system, and you need to do that by the 31st of March, and that is your personal responsibility. You go to the tax portal. For Lagos State is etax.lirs.net, create your account. You're supposed to have a tax account normally, as long as you're an employee, because that's where your employer pays your tax to, and it reflects under your payer ID, or what we call tax ID now. So if you have that account, you log in and disclose your taxes yourself and pay your tax, your income yourself, like other streams of income outside employment income, and pay your taxes yourself. But some employers help employees that cannot do that, and they tell you, okay, when it's time, like at the beginning of March, some employers will say, oh yeah, fill out this form. If you have any other income apart from what we are paying you in this company, fill out this form and we would help you report it and then calculate the tax and you pay. A number of employers do that. But to wrap up this session, just to give a more complete response, under the new tax laws, there's something called rent relief, because you're asked about documents that need to be kept. You need to keep documentation on the rent you pay, right, on an annual basis, because that's the basis on which your employer will calculate your rent relief, which is 20% of the rent you've paid that year, or capped at 500,000. It's a relief. Basically, it's something that's meant to reduce your taxable income so that you pay less taxes. It's not a fantastic relief when you compare it to what was applicable under the old law, which was about 21% relief, consolidated relief allowance. They've taken that out and only given us 500,000 cap. It's not a great relief, but you need to keep your records if you want to take advantage of that deduction. So keep your tenancy agreement and rent paid.
Will my transfer be enough? Will the transfer I sent to my landlord be enough evidence?
So the NRS is supposed to come up with guidelines on what documentation would mean, but I do not think that transfer alone will be sufficient. You need to actually show like your rent, your agreement, your tenancy agreement, which is why the law is always, the tenancy law is like every agreement for tenancy should be documented in writing. So you need to have a tenancy agreement, and that I think is what will be a more substantial documentation in terms of what your annual rent is. Then of course you can support it with the evidence of actually paying the rent, which is the receipts you've paid, the receipts of the evidence, the payments you made rather.
Okay, thank you very much for that very very clear explanation. I want to bring Stanley in, and just to flow from what Kelechi had said regarding salary earners, and he had talked about the company already paying taxes. I also just want to expand a little more on those who have side gigs, multiple side gigs. Your company is paying you your salary, you have multiple side gigs, you want to be able to pay your taxes and be sure that your books are in order. What are some of the things they must take account of?
So for the people that which is fantastic submission, Kelechi, and for a lot of people that probably are employed or have side gigs, or for freelancers, because that's another thing that that is in consideration for a lot of freelancers that are there. A lot of them have never paid tax before. This is going to be a lot of their first time, because they just get the monies and they spend. So for them, you need to be able to know what is my how do I calculate the total tax that I'm liable to pay. There's a lot of misconception. People think some people are earning $1,000 every month. Some of it comes up to 12 to 15 million naira annually. So some people say, oh, the government is just going to take 30% of this 15 million naira. That's what they assume, but they don't know. Now, the second thing is that where are you resident? Are you resident in Lagos, Abuja? Where are you supposed to file that for your personal income tax? So I do have an aggregate. Do you know the amount you're supposed to take out? Just like you mentioned, the rent relief. Then do you know the other deductibles that are accrued to you? Things like, house, national housing, health insurance, mortgage. Do you know that if you can then decide, some people that have been delaying, getting health insurance, that you can get your health insurance and you can deduct that from, for you and your spouse. For you and your spouse, you can deduct it from your salary. Do you know that those things, do you know that you can contribute more to your pension account? And then you can take out that money. So instead of you, what I tell some people is that instead of me to carry my money now and go and give to the government in terms of the tax that I'm accrued to me, why don't I then increase the amount I pay to my pension fund and then do that deductible for myself, so that I save for myself money in the future? The new tax law tells you that you must perform certain activities to get relief. Unlike the other one that had like a bit of consolidated tax relief. Now, if you go and undertake certain actions like health insurance, like mortgage, like your contribution to your like your pension and all that, all those things, annuity and all that, you can then remove that money. You can then do that deductible for yourself. So you need to know all these things. What is the method that I'm being paid? How can I go and file for these taxes? If you do know these things, you know that you are now equipped, you're now armed with this knowledge. And then moving forward, you're not going to be scared about the amount that you're paying. Mind you, a lot of this guy, a lot of them might end up paying a reduced amount if they can follow through this process and not fall into the hands. And again, they shouldn't run from the government, because if you do run and then you are giving best of judgment at the end with penalties, then you fall into more trouble. So being aware of this and then having the adequate documents for you to use to file, that's like your first stage. And that's what I would advise for a lot of freelancers.
All right, thank you very much for sharing that. Still looking at, personal tax. Purchasing, right? So we've been advised to keep our receipts. People go to the supermarkets to buy things. You go to buy your groceries monthly. What is the importance of keeping those receipts? Are those just speculations as well? And some of the fears that I've heard expressed as well is that the supermarket will collect their own tax. Is there going to be a situation where there's a double tax occurring? So how important is that? Or is that just mere fear mongering? Let's go to you, Kelechi.
Okay, Olive, thank you. And very good question. The response to this question depends on who's asking, right? So if you're an individual who is in paid employment, that means your employer has already taken your tax and you got a net salary at the end of the month. You don't need to keep any receipt for anything, because you're not keeping it there's no reason to keep it. You're not keeping documentation for another tax you need to pay. No. So that money is taxed. You've already been taxed on it, so you can spend it anyhow. You don't need to account for how you spent that money anymore. So there's no need to keep any receipt. So you can go for your shopping, buy anything you want to buy. You don't need to keep any receipts, unless you just want to keep it to track your personal finance, how you're spending, your budgeting, and stuff like that for personal finance management, but not for tax purposes if you are an individual in paid employment. But if you are a freelancer or a business owner, let me switch to be freelancer. So you are a freelancer, you have a business name that you use to carry on your business, or you don't actually have a business name, you provide your services yourself. Now, the kind of tax you pay as a freelancer, because you don't have an employer, is a direct assessment system. So you still pay personal income tax, but then you pay tax under the direct assessment. What that means is there's nobody deducting your tax at source as if you're an employee. Now, your clients might deduct withholding tax from your fees. That's standard. So if you're working for a company and let's say you're a software engineer and you're a contractor, you just do contract, you're not an employee of that company, and they pay you, and let's say it's a Nigerian company, you can deal with the foreign entities later. That one is a bit more complicated. I can speak to it later if it's necessary, but let me deal with you being in Nigeria and you have a Nigerian employer, a Nigerian client, right? And they pay you as a consultant. Now, on a monthly basis, when they pay you, or whenever they pay you, maybe annually, they deduct withholding tax from your fees. Now, that withholding tax is not the same as payee that they deduct when they are dealing with employees. They still pay that money as your tax. It's an advance payment of your income tax. What that means is, as an individual, you still need to prepare your returns as an individual under the direct assessment method. And then at that stage, at that level, now you can take out some deductions, right? And the deductions you can take out are like the ones Stanley mentioned, your health insurance, your rent relief, your National Housing Fund contribution, your pension contribution, your voluntary contribution if you're doing more. And I think for the most part, that's it. Because you're not running that you're not running yourself as a business, you can't take out some business related expenses, which is what another part of the conversation we need to have. If you're running your structure as a business name, let's say you are the consultant, but you are running it through a business name, then you can take out some of those expenses, like the cost of fuel for your office, the cost of the rent for that office, the cost of internet for the office, all of those expenses that you run, because you're running that enterprise as a business. You can take out those deductions. That's where you now need to keep those receipts of purchases, because you will need those to substantiate your deductions as a business, right? So like I said, that response depends on whether you're running a business or as you're doing stuff solo as an individual. So if you're running a business, because your business has its own expenses separate from you as an individual, whether under a company structure or under a business name structure, you need to keep receipts for the business expenses, because you're required to actually pay taxes on your profits as a business, not on your revenue. And to arrive at your profits, you need to show the deductions. You need to substantiate every expense you're deducting, from your revenue or your income to arrive at your profit, which is what you now pay tax on. So at that level, yes, you need to keep your receipts, your documentation, clearly and well documented, so that when the taxman comes, you can show him everything you deducted and with the evidence of the money actually spent.
So now, Stanley, let's move on from personal business, from individuals, and then talk about SMEs, because oftentimes we've heard the government talk about how this benefits SMEs. How?
So for a lot of businesses, for a lot of small businesses, first of all, the categorization of small businesses is a major, what would I call that thing? I would say give kudos to the government. So first, the people that fall into the category of small businesses are people that are below 100 million. If your turnover for a year is less than 100 million, you qualify as a small business. Now, that puts about 80% of Nigerians in that category. Of them, say 70%. I think 70 to 80%, if I'm using a rough estimate for myself. So I'll say 70 to 80% of people fall within that category of small businesses that in a year, their turnover doesn't get up to 100 million. So that means that you're not exempted from most of the taxes that you would have that would have been accrued to you if that was not exempt. So you as a small business doesn't still mean that if you are a small business, that you still do not need to go and file. That's another side of the thing that there's a compliance side, because the government doesn't know that you're a small business. So you need to be able to go and say that I'm a small business, I'm not paying any tax, but you need to be compliant. You need to go and have that assessment, that self-assessment. You need to go and do it and file that I'm a small business, I don't have any tax that I'm paying, my turnover is less than 100 million a year. So that is another part that I think a lot of people are not paying attention to. Yes, you're exempted. Yes, you have these benefits to you, but you need to be compliant. Then there are exemptions. There are so many exemptions in terms of things like for healthcare, for education, for things like sanitary towels for women. If you sell some of those items, you have like a zero rated VAT. And then zero rated is that for any inputs and for food, for basic food, for any inputs that you use in producing those goods, you can claim back that VAT. So if I paid VAT for producing gari, for example, or water, for example, that input cost, maybe somebody transported, I bought machinery for it and I paid VAT on it. I can take back that VAT because that's where it's zero rated. I can take back that VAT as that VAT that I paid whoever it is that I used. When I'm doing my own deductions, I can remove that VAT and claim it for myself because it's zero rated. So some of those things for like healthcare, for healthcare and pharmaceuticals and all. So you have that. There's that addition to them for those small businesses that fall within that category. There's not even that addition for them, and for big businesses, there's not even that addition for them. Then there are people that are tax exempt. Things like rent are tax exempt. So if you have this thing and there's rent, is tax exempt. It doesn't mean you can't claim it back, but it's exempted from tax. So now you being able to know that this is my business, where do I fall in? Am I exempted? First of all, do I have, is my turnover up to 100 million? And it's not the one that you're splitting accounts. So there's another thing that a lot of people want to now go and then split into different accounts just to say, oh, my turnover doesn't get up to 100 million, and then I'm splitting my name, my personal account and my distant account, so I don't get to 100. If you are going to now go that route, you need to have like a limited liability company that functions as a structured, as a legal entity of its own, that is performing its own identity. So it has its own, Kelechi is a lawyer here, so he can throw more light on. But you need to have a business entity that functions as a legal entity that functions as its own. Not that you have 3 business names, including your own account, and then you are doing all those things and saying, no, at the end, it's still you at the end of the day. People need to know what they fall into, what type of accounts, and I think maybe speak to that, what type of accounts that they are running, what is allowed as deductibles. Because a lot of business owners, we're talking about business owners, for example, a lot of business owners are running their own business expense with their personal account in their own name. And then you now, at the end of the day, want to go and take out some business expenses like your cost of electricity, your rent, all the input costs that are used in generating that income for your business. You can't do that as a business. It's not allowed. Those are not allowed on a personal account or as an individual. But you then have those opportunities as a business, as a registered business, when you're running your account as a business. So being able to know this difference is very critical, especially going forward for most businesses, both small and then for the bigger ones that are supposed to pay those taxes.
All right, thank you very much, Stanley, for that. Let's go outside Nigeria and then we'll come back to Nigeria. Let's talk about Nigerians in the diaspora, because we know that they play a huge role when it comes to assessing inflow of FX. There are a number of them that run businesses in Nigeria, and there are those that don't run businesses in Nigeria. So let's start with Nigerians in the diaspora that have their businesses running in Nigeria. How does this impact them? And then we'll talk about those who have Nigerian accounts that they just used to come and flex, for 30 December, or they used to take care of their families, but they don't have businesses here. Kelechi, let's start with Nigerians. Let's talk about Nigerians in the diaspora that run businesses here.
Okay, so if you're a Nigerian living in diaspora and you run a business in Nigeria, it doesn't really have, there's really no difference in terms of, where your business is and where you are. If you're running a company, like if you're running your business as a limited liability company, and like Stanley was trying to say, what that means is, as a limited liability company, that entity, that business is separate from you as an individual. Right, so your business is a separate legal entity. It doesn't matter where you're running it from. That entity will pay taxes in Nigeria. That business, that company would pay companies' income tax in Nigeria if it is liable to companies' income tax. And the threshold for being liable to companies' income tax in Nigeria is 100 million and above in revenue, or you have assets worth over 250 million naira. Those are the thresholds. So if you run a company in Nigeria that meets that threshold, that company would pay companies' income tax in Nigeria. It doesn't matter where you're resident. But then, how do you now get money out of the company as a person? Now, that's where dividend payments comes in. Your company can pay you a dividend if it is profitable, right? If your company now makes money at the end of the year, it looks at its account, it has made a profit, it will declare a dividend to you as the owner and pay you a dividend. Now, at that stage, that company will deduct withholding tax at 10% from that dividend it's paying to you, in a foreign country, and that will be the final tax you'd have. So you're basically going to be paying just 10% tax as an individual earning money from your company. And that rate changes depending on what country. So if you're living in China, or you're living in Sweden or Singapore, or I think there are about 6 countries where the withholding tax rate for dividend is 7.5. If you live in any of those 6 countries, Singapore, Sweden, China, there's another one, I can't remember, there are like 2 other ones, the company will deduct withholding tax at 7.5%, and that would be your final tax as a diaspora person with a company in Nigeria. But if you're running your business in Nigeria as a business name, not as a company, right? Like like I said when I started, your business name is the same as you, as the businessman. So the way we look at it in law is, you are trading. Let's use Olive. Olive Emodi is trading under the name and style of whatever name. Let's say she calls it Olive Enterprises, right? Say again.
The Olive Emodi network.
Exactly. Yeah. The Olive Emodi network. Exactly. So what that means is that business and Olive are the same people, right? It's just that she has set up a structure to run it, but you're really liable. And to understand this distinction, when you run your business as a company, there's a liability. It's a company that is sued, right? If the company does something like all these cases where you hear people take money and they don't deliver on the promises, you see, they don't go after the individual behind the company. They always sue the company, even though there's an individual behind that company. That's because the company has a separate personality. But for a business name, it is, they will not sue you or leave, but it's Olive they would sue, if anything went wrong, because she's the same person as her business. And it's also, this distinction is important from a tax perspective. I went at length to explain it so that you understand it from a tax perspective. Now, if you are outside of Nigeria, but you run a business name in Nigeria, you'll be liable to pay tax in Nigeria as if you are resident in Nigeria, because you're one and the same with your business. So it doesn't matter whether you're in US or in the UK, but your business is registered in Nigeria, you're running a business here in Nigeria, you're making income in Nigeria, you would pay tax as if you were in Nigeria. And don't forget, you're paying personal income tax, right? Because you're an individual running. So business names pay personal income tax, while companies pay companies income tax. And the reason is simple, because the business name is the same as the individual running the company. So the structure by which you're running your business determines whether you will be liable to tax in Nigeria if you are offshore and you're running a business in Nigeria. So in the later case, like I said, if you're running a business name, you would then have to, report that income as if, your business is paying the tax, but you are the one paying the tax through your business. So when your business pays that tax through you, the tax has been paid. And that's another interesting thing about business name structures. You don't have two types of taxes. Unlike company's income tax, where the company would pay its company's income tax and you, the individual, will pay your personal income tax if you earn a salary from your company, or you pay tax on the dividend your company pays to you. For a business name, it's only one tax. There's nothing like profit distribution tax, or anything. Once the business name has paid its tax, you, the individual, have also paid the tax, because you're one and the same people.
So that means if you would advise, as a freelancer who's trying to put structure to my business, you probably start with a business name as opposed going to, register a company. Would you advise that?
Starting, I'm trying not to give tax advice on the call, but again, it's those responses are usually nuanced, because I've had a lot of people come to me and ask these questions, and I always ask, there's some questions that I ask, right, to tell you to decide whether you should run your business one way or the other, right? But the natural preference, based on statistically speaking, it will make most sense to run a professional services business, like as a business name. Like when I say professional services, like a freelancer, it will make most sense to run that freelance as a business name, because you're one and the same. That's if you are not afraid of liability, right? So if you are afraid of being sued and liability, then you can separate yourself from your business, and if anything happens, your business will be sued and you will stay. But if you don't care about liability, then you can run a business name, which is why a lot of the audit firms and law firms and accounting firms run as business names, because the law doesn't want them to separate the liability from themselves. So if you're giving tax advice, or you're giving not tax advice, audit services, or you're giving legal advice, you have to take personal responsibility for any outcome of that transaction.
All right, that's very clear. Thank you very much, Kelechi. Stanley, let's talk about Nigerians in the diaspora that do not have businesses here, but they have Nigerian accounts. So I'm assuming that, anyway, let me let you answer that. I wanted to make an assumption.
No, you can give your whole context and I will still answer.
Yeah, okay, so Nigerians in the diaspora, they have Nigerian accounts here that they fund, to be able to take care of bills here in Nigeria, take care of family, and even for personal expenses when they come into Nigeria. How does that affect them as well?
Okay, and so the
questions is Nigerians in the diaspora that have Nigerian accounts, as well as Nigerians in Nigeria that earn in foreign currencies.
Okay, all right. So first of all, what you are required as a tax resident in Nigeria is that you'll have spent over 146 days. Am I correct? The number of days? 146 days in 146 days. 186 days. Yeah, 186 days in Nigeria. So that's to make that you're a tax that you need to, for a person that needs to be, that is designated as someone that is tax obligated in Nigeria. You need to have spent 186 days. So if you do not fall within that category, you know that you don't have your obligation here. So your personal income tax, if you're running your business, it's all there. Now, any money you are sending back home is a remittance. It's remittance. Remittance is not taxed. So remittance is not, if you tax remittance, that means Nigeria, everybody will just, the CBN will just close shop. So they can't tax remittance. It's remittance. It comes in as remittance, and that's also doesn't factor in whether you've paid tax wherever you are or not, because there are countries that have zero personal income tax. Places like Dubai have zero personal income tax, so it doesn't amount to whether you have paid tax wherever you are and then you are remitting the money back home. So now, if you
sorry to interrupt. That protects the person who is remitting the money back home. What of the person who the money is being remitted to?
So if you then if you live in Nigeria and you are earning money outside Nigeria, it recognizes global income. So that you are living in Nigeria, the government of Nigeria is protecting you, giving you, saving you from harm, trying to provide a conducive environment for you, building roads for you, all the amenities that the government is doing for you. So you are liable to pay your tax here in Nigeria, even if you earn your income abroad. So that's where the global tax thing comes in. So they have to put out that so that you, wherever you earn your income, as long as you're in Nigeria. So that now even comes into like some companies. So some companies are exposed to income outside, but they are Nigerian companies. And they make a lot of that money outside Nigeria, but they are in Nigeria, so they are now obligated to have their paying their tax in Nigeria as if they have earned that money here. So whatever is accrued to them, So
if you are working with a multinational and the multinational outside of Nigeria, but you are living, they pay you here. The country. You pay the tax that country's, whatever country is situated in, you pay tax there. And for the Nigerian government taking care of you and providing your roads and everything, you pay another tax here. Is that correct?
So there's a double taxation agreement with certain countries. I think there are about 14 or 15 of them. The UK is part of it, because I know you have a lot of Nigerians in the UK. The UK is part of it. Netherlands is part of it. Rwanda is part of it recently. There's about 14 of them. The US is not part of it. So now, if you are earning money in the US and you are taxed in the US, you can't claim it here. You can't come and do yours and say, I'll be taxed in the US, because there's that agreement is not there. But for all the countries that have the double taxation agreement, avoidance of double taxation agreements with Nigeria, if you are taxed in those countries, you are not, you can just go to this, but I'm not paying that tax. I've already been taxed wherever it is. You can see it, the agreement stands and it works for you. But if you don't fall within those countries that have that agreement, I'm sorry, you need to go and talk to your tax.
Yeah, but I think just to say, Stanley, you're right actually about the double tax treaty completely, and I agree. But there's something that came out in one of the last versions. There were a lot of issues with the tax, the versions of the double. So one of the last versions that came out, there's a provision now in Section 120 of the Nigeria Tax Act on foreign tax credits. Now, I don't know how it's meant to work. The government is meant to, the NRC is supposed to release a circular clarifying how that's meant to work. But the foreign tax credit simply, from what I have read the law to mean, it suggests that if you pay taxes in another country, right, and you have evidence that you actually pay taxes, even if that country doesn't have a double tax treaty with Nigeria, you could claim it's a new invention under the law, and I think they did it to help our growing tech economy where people work in Nigeria,
especially freelancers.
Yeah, exactly, to avoid double tax. But like I said, they will still need to clarify the steps you need to, because you can't just claim the credits. You need to There are some guidelines they will need to release on how that will work, but I know that provision is in the law. The last time I checked, unless they've removed it now based on all of the changes they've been making, but I think it's there, Section 120. You can claim a foreign tax credit, which should be a very good thing for freelancers who work in Nigeria to avoid double tax, even though Nigeria doesn't have a double tax treaty with all the countries in the world. So I just wanted to chip that in.
Thank you for chipping that in. I also want to talk about remittance again. And this is for Nigerians in the diaspora, because since the Japa syndrome kick-started, a number of us have families in different parts of the world. From the explanation that Stanley gave, when the diaspora remittances are not being taxed. So they're not being taxed for the person who's making the payments into Nigeria, right? The Nigerian who is transferring back is not being taxed for him. But what of the person receiving? I don't think I've gotten clarity on that here. So my sister or my friend is sending me money, and they're sending me like huge sum of money to do whatever it is I want to do it with. Would I be taxed on that, even though they're not being taxed? Will I have to bear the responsibility of being taxed? Either of you can choose to answer.
Kelechi, do you want to answer that?
I was hoping you would answer it, because honestly, I don't have a direct response. And the reason I say this is, when I look at the law, because the way the tax laws are drafted, it's very strict. Even though the general principle in law is that if there are ambiguities in the tax law, you interpret it in favor of the taxpayer. But there is no way in the tax law that remittances are exempt, like foreign inflows are exempt from tax. None. It's zero. It's not there. And if there is no clear exemption of an income from tax, best believe that income is liable to tax, because the way the law is drafted, it covers all kinds of income, even those specifically listed, and anything that can be seen as an income. So it has to be specifically exempted from tax for it to be exempted. So my personal view, again, like I said, is that there is nothing in the law that exempts those remittances that you receive from your relatives outside from tax. But the reason why I was hesitant to answer the question is because Mr. Taiwo Ogedele, who is the chairman of the Presidential Tax Committee on, Committee on Tax Reforms and Fiscal Policy, has said that foreign remittances are not liable to tax. He said it. Yeah, but I can't see a legal basis for it, which is why I don't like to answer the question. And again, it depends on what you're getting the money for. So if it is given to you as a loan as a company, it wouldn't. Sorry, I said as an individual, your family member is giving you a loan. You don't pay tax on loans. But if it's just a gift, right? Again, people say gifts are not taxable. It's the same logic. There's no way in the law that gift is exempt from tax. So even if you call it a gift, it doesn't cover. But like I said, it's my personal view, and I can't speak authoritatively on the matter. So, but I'm happy to stand it.
Okay, so I like Kelechi is a lawyer, so he likes to go according to the dictates of the law. Fantastic. But now let's talk, just like he said, which is very important. Now, when there is a favor, which is why I think personally, Taiwo has said most of what he has said, is that when these laws do not have that explicitly, you put it in favor of the taxpayer, just like he has mentioned. But one thing that we need to understand is that the country is looking for remittance. So I'm speaking as the banker right now, and the country is looking for remittance. You cannot tax remittances, because if you do tax remittances, it will dry up. Taxes run from where anything that you tax flies. You can use the UK, for example, that has imposed like heavy taxation on most of its millionaires, and they are exiting the country. So at the base, that is why the government is coming out with a lot of its initiatives to try to explain to people, try to have this conversation ongoing, so that people will see the importance of why they need to pay this, and giving a lot of exemptions to almost like 70 to 80% of Nigerians, because they understand what it means for you to come out to people to tell them to pay. So for things like remittances, once you are paying any money into anybody as it's coming in, it's not an income to you. For example, it's not an income, which is I think where the import comes. So I've sent money back to build a house. It's FDI. It's a foreign direct investment. It's not an income. that was earned in Nigeria. It's a foreign direct investor. So I've sent in 200 million naira now. I want to use it to develop a property. Now, if you are not going to tax that 200 million naira, I would rather keep it in the US. So I'm using this logic now as a bank because there is no explicit. So I want you to understand from the thinking process of, like bankers and what people that are advising the government will be saying. So if I'm bringing this money in, or people that want to bring in 500 million to say they want to develop a property and all, if you're not going to tax, you're supposed to then tax the business when it has generated income. That way, you've brought in the money has started up a business, and then from that business that it has started, it can now then generate taxation. You can now then tax it from the proceeds by after employing labor that still pays you personal income tax, the company that still pays you company income tax, maybe development levy and the rest of it. So for remittances, I'm not saying this is me saying, like, I'm almost like 90 to 95% sure that the government is not coming out anytime to say they are going to tax remittances, because that is the second form of our highest earning as a country. After oil receipts, the second earning is remittances. So you can't afford to tax it. So for people that are sending money back home, please keep sending. Nigeria needs the money to stabilize the naira. So you don't need to bother.
Please, they should send.
I agree.
Very generous. I'll send my account details. And this whole thing of gifts, right? In Nigeria, there's been this new thing where people are putting every transfer, they're putting gifts. Gifts. This is Ajo money, please don't touch. Can you find that is important or not important?
Okay, let me speak before Kelechi will speak. There's another thing that you need to understand for Ajo, and I think maybe I should even make a video on that. If you are collecting money as Ajo, at the end of the month, that money lives in that number. So if you're taking, if it's 50,000 and you people are 10, you notice that at the end of the month, 500,000 leaves that account to one person. So the taxman is not a robot, or the tax people are not robots. They see, you just say, I have a job, and the money is not an income to you. Because another thing that we should understand is that we're factoring in income. Now, it is income, it is savings. At the end of the month, after a 12-month period, you realize that the ajo that you have paid over 12 months is your own savings. You just have staggered the way that you have saved that money. So whatever income that you have earned, the original way that you got the money that you used in putting the ajo, that is where you're supposed to have paid your tax. But if you are receiving, whether it's 1 million that you people are contributing every month for this thing, it clearly shows in your statement that at the end of the month, 12 million naira, if you put at 12 million naira leaves, and then the next month, you could contribute again. That's the money that comes into your account, 12 million naira leaves. And at this month, 1 million naira comes. There must have been a source of that revenue, that income that must have come to you. So people should not be scared of, having their esusu and ajo coming into the account. Just being able to know that that money comes in and goes in, you should be able to explain it. You should be able to do, when you're doing your assessment, you should be able to clearly state that is a deductible. And anybody, whoever it is, whether an auditor, an accountant, or even a taxman that sees it, can clearly see it's just an how they put that thing in and out, as some people say in accounting. So yeah, they shouldn't be scared of it.
Thank you very much for explaining that we shouldn't be scared about this. This time around, I want us to talk about the myth, or the fear that if you haven't remitted your tax, that the banks can automatically deduct money from your bank. So Kelechi, please speak to that, and then I'll come to the next question for you. Oh, Stan, you want to speak to that?
No, I'm putting that to Kelechi. Kelechi, please. You're the lawyer here.
Right after this, we'll take questions from the audience. So please keep your questions coming in. But let's hear from you, Kelechi.
Okay. Yeah, I actually saw a question in the chat on that as well. So this thing is called the power of substitution. And just to put it out there, it's not a new provision of the law. It has always been there from 2007, actually. But I haven't quite seen the government enforce it. There was a time in 2019 they tried to do it. I remember there was a case involving Stanley, IBTC, and the FIRS. But just to clarify the way this thing works, yes, the simple answer to the question is yes. The government can, the NRS or any other tax authority can instruct your bank right, to take your money the money in your bank account and transfer it to them to pay your tax. And it's not just your bank, any other person who is holding on to your money, right? It could be your employer, it could be anybody else that has your money in their possession. They can be instructed by the tax authorities to make payments of taxes on your behalf. But it doesn't start from just writing and telling them to deduct. There's a whole process that leads to that instruction, and that's what I will try to explain in like 1 minute or less. Now, there's something called a notice of assessment. Like I said, under Nigerian law and in most countries around the world, the employer has the obligation the individual has the obligation to report their income themselves and pay the tax themselves. It's called self-assessment. Now, if you do not now on your own disclose your income, let's assume you're not in paid employment, so your employer is not deducting your tax or paying it for you. You are in business, or you are a freelancer, or you have other kinds of income, even though you're in paid employment, but you have on your own refused to report that income and pay the tax. The government has the right to assess you to additional tax, and that's what Stanley was talking about, something called best of judgment assessment. The government will just come and say, based on our review of maybe the house you live in, the car you drive, the kind of jewelries you wear, like Olive wears fancy, nice clothes, and Stanley is looking like a very rich man. He's a rich man, actually. They'll just say, I think, they'll just say, I think your net worth this is how much I think you are worth, and this is how much tax you should pay. So they will issue you a notice of assessment telling you to pay a certain amount of tax. Now, most times, that amount is not based on any facts, no documents, because you didn't file anything with the government, so they don't have anything to rely on. They're using circumstantial evidence at best to determine the tax. Now, what you're supposed to do as an individual when you get that letter is to object, and you have 30 days under the law to object. Objection is respond. Tell them, oh, I don't agree with your calculation. This money is too much. I don't earn this. And then supply your evidence why you are not earning that amount. Maybe your bank statement and the taxes you've paid. And so basically, you need to object within 30 days. Now, it is when you do not object within 30 days that assessment becomes final and conclusive. That's what the law says. It means you are now owing a debt. At the first time, the government is just saying this is how much we think you should pay in taxes. But if you don't object within 30 days, the law now says you have confirmed by not objecting that that's what you're owing. It has become final and conclusive. That means you're automatically owing a debt to the government, and the government can say again.
Silence is now consent.
Exactly. That's a simple way to put it. So, but if you object within 30 days of receiving that letter, the law says the NRS or any tax authority has 90 days to respond to your own objection. Now, their response could be, okay, we agree with your explanation. Okay, instead of paying 10 million, pay 5 million. You've been able to explain 5 million away, so pay 5 million. Or they can say, okay, I agree with you entirely, don't pay anything. They will withdraw the assessment. Or they would say, we don't agree with your objection. We still think you should pay the maybe 10 million tax we asked you to pay. Now, they will issue you something called, so they are going to issue you either of two things: an agreement to what you have said, an agreement with your position, or a refusal completely. They will say, we don't agree with your objection, so go ahead and pay the tax we already assessed you. Now, when that happens, you now need to go to court, to the tax appeal tribunal, within 30 days of receiving that final letter from the NRS or any tax authority saying they don't agree with your response. Now, once you file that case in court, at the tax appeal tribunal, that matter goes on to Supreme Court, and you don't have to pay anything. Nobody will touch your account. Nothing will happen until that case is fully determined. But if you don't object within 30 days, that's where the problem arises, because that assessment will now become final and conclusive. The government will now be seeing it as though you are owing them a debt. And under the law, all that needs to happen is for the NRS to issue something called a letter of distraint, which is, you are owing us money. If you want to claim the money, they'll issue you a warrant. It's like a warrant issued by the chairman. You don't need to go to court for that kind of transaction, because the law is clear. You are owing a debt. They will now write to your bank with evidence showing that this is how much we told this guy to pay. He didn't object in 30 days. Under the law, that debt has become final and conclusive. So charge his account, pay this money to us, And that's how the bank can now come about taking money from your account. Sometimes some banks will require a court order. Some banks will not even agree to deduct that money. They'll tell the NRS to still go and get a court order. And once they have that court order, and it is easy to get the court order because they will get it ex parte. Ex parte means they don't need to bring you to court to make your case. They just need to show documentary evidence to the court showing that they issued you an assessment, you didn't respond within 30 days. Under the law, it's final and conclusive. So give us a warrant, an order for the bank, and the bank would move the money. So you see, there's a whole process that leads to this charging of your account. But yes, they have the powers to do so. So simple response is, if you get any letter from the tax authority, don't keep quiet and just put it in a folder somewhere. Speak to a tax consultant, respond to that letter within 30 days. Otherwise, anything that happens to you is up to but again, just to say finally, the cost of collecting tax, right? The government spends a lot of money to collect tax. You see, this whole process involves money. So they won't be chasing people that are owing 1 million, 2 million in taxes.
Exactly.
Process. It's for high net worth individuals. So that's charging of your account is not for your 50,000 or 100,000 tax, or 3 million tax is even small. Even 5 million is small money. It's for people that are owing reasonable taxes. So it's for the top big people that are earning money. So don't worry about it if you're not a big man in Nigeria. I don't think it should ever get to that point for you.
All right, thank you very much. Very quickly, we're going to start taking questions, but Stanley, in as short a time as possible. So when somebody gets a letter, or they're informed that they need to file their taxes they have outstanding, what's the next step? Is it to get a tax person? Is it to get a lawyer? What's the next step?
So if you're knowledgeable enough, because there are people that are knowledgeable enough, you can respond to the authorities yourself and say, oh, I do not agree with this. This is this position. This is current position. And like, for example, if the tax authority were to send a letter to me, I probably might not need to call. I might just call Kelechi and say, guy, just tell me what I should write here. He can just tell me, okay, we'll do this and do that. So because to a large extent, I'm aware of what is obtainable from me, where I might have defaulted, if I have defaulted, and whatever their best of judgment, just like Kelechi had mentioned, what their best of judgment must have been and the errors they must have made, I can respond. But if you do not know that, especially if you're a big business, because this is where the import is, I do not think this whole tax thing is coming like the 80% of Nigerians are screaming is doing for them. It's for like these businesses, especially for these Igbo men or these traders in the market, or these the lodgers that are in these big markets that have never really paid taxes. And these people do good turnovers of well over 300, 400 million annually. So by the time they come up to those people, they know that, okay, there is something in there. By the time we aggregate a number of these guys and they send them these letters, they are the ones that they have to start doing this back and forth. If they come and give you a best of judgment and say, come and pay, you have noticed that you've not paid taxes and you are supposed to pay 60 million naira. You are not supposed to go and call someone like Kelechi or go and meet a tax consultant and say, see, this is the letter that I received. How do I respond? I know I have not paid, because most times, most of these people are liable. Over like 50% of the time, they are liable. So they've checked their record. You don't even have TIN number. You don't even have TIN number to start with, aside the one that the government gives to you. And they can see a status of account for you that is reading over 500 million. You have become their customer. So they send you that letter. Please respond, and respond within the time frame. One of the things that I would advise a lot of Nigerians is that do not take this to be one of those things that is just no be Nigeria we dey. So that is a very common thing that people do. Say, is it not Nigeria? They should do their worst. Please don't let it get to that point, because by the time it gets to that point, you can now fall into something that you never envisioned. But if you do respond to that letter, I've seen correspondences that have gone on for 2 years. I've seen correspondences that have gone on for 2 years. I did not agree to this. This is what you put. No, this position, I do not agree to it. They go back. This man in question was writing this letter himself. The position came down from, they went on from like almost 50 million naira down to 1.5. They were telling him, just come and pay the 1.5 and let's close this case. He objected because he knew where he was standing and what was obtainable to him. And this correspondent went over 1 year. Like, as at the time I was talking, this started from like 2024, this is 2026, and they had not resolved that matter. So please respond to that letter in good time so that you avoid being in trouble with the authorities.
Thank you very much, Kelechi Ibe and Stanley Onuorah, for explaining some of our concerns We have a number of, I can see the questions in the chat, a number of people have said in the questions, and I'll take as many as we can. But keep the questions coming. Let's quickly do our first giveaway. We have gifts for you. There's a QR code that is going to be on your screen. We want you to please, as much as you can, slide. We want a giveaway. But before you partake in this, I must mention that it's for the first 100 people, and you must use the name that you used at the point of registration. There's a link we're going to share. Please click on the link. We have 30 seconds to do this. So I'm just going to hold on while we click on the link. Fill your details. The first 100 people to get into the link, you'll be contacted with your gift. But for us to be able to contact you, you please have to use the name that you used at the point of registration. Someone's asking here, as a POS operator, what do I need to know about paying my taxes, makeup artists? All right. Yes, we have the link. So please, we have a few seconds for this, and then we can proceed with the questions from our audience. All right. So these are very, very, very quick questions. Let's start with someone's joined the quiz. All right, these are our first set of winners. Congratulations. You can join at slido.com. If the link is not working for you, visit slido.com and use the number there. You can see the number 4128276. And it's on Lowu, Mayowa, Okere, Grace, Agogo, Okoro, Clinton, Festus, Amadi. Keep it coming. Keep it coming. I can see your names. I can see the names of those joining in. Benga, Somiola, Sukomule, Oloyete. Yes. All right, so the first 100 people are the ones who will get our gift. Oxygen is the subsidiary of A, hydrogen, B, Access Bank, C, Access Holdings, D, nitrogen. All right, 12 seconds to go. Click the correct answer, and then you'll be one of our lucky winners. All right, okay. Hydrogen, Access Bank, Access Holdings, and nitrogen. So 52% picked Access Holdings. Congratulations. We will see our winners and you will be contacted. Let's go to question number 2. And let's reveal the answer. Of course, it's Access Holdings. Let's go to question 2. Oh, leaderboard. Ifeoluwa Adewumi, your number 1. Congratulations. Abubakar Gambo, number 2. Jonathan Orefua, number 3. And we have number 4, Elizabeth Omolara Otito Yomi. Congratulations. Let's quickly move to question number 2. And question number 2. Okay, we have just 6 questions. Oxygen X is on in all these platforms. A, Instagram, B, Facebook, C, Twitch, D, TikTok, E, LinkedIn. You have now 10 seconds to choose the correct answer. 10 seconds. Typing it is not going to give you the answer. You have to click on it. But yes, keep the answers coming. And we can see the percentage. Twitch, 67%. Instagram, 5%. Facebook, 5%. TikTok, 16%. Now let's reveal the correct answer. Oxygen X is not on Twitch. So please look for us on all social media platforms. On Instagram, Facebook, TikTok, and please follow us. And if you follow us, we promise to make you fishers of men. Let's go to the next question. All right. Okay. Abubakar Gambo, number 1. Ifeoluwa Adewumi, number 2. Jonathan Orefua, number 3. Okeke Rejoice. Frexinet Squish, number 4. And Damilola Folorisha, number 5. Congratulations. Let's go to number 3. Question number 3. Oxygen X offers all except A, fixed investment, B, lending, C, POS financing, D, virtual cards. You have less than 10 seconds to put in the correct answer. 3 more questions to go. I can see people making guesses or putting their guesses in the chat box. It's quite interesting to see that. Now let's see what the percentage is saying. The highest percentage is for virtual cards, 38%. POS financing comes right up next, 33%. Let's see if you're correct. Now we reveal the answer. The answer is virtual cards. So Oxygen X offers fixed investment, lending, POS financing, but we do not offer virtual cards. Congratulations to Jonathan Orefua, who's number 1. Okeke Rejoice, you're doing really good. You've been leading in the number of questions now. Kelechi, Gbenga Shoriola, and Jane. Congratulations. All right, let's go to our next question. In what year did Oxygen X get its license? 2021, 2024, 2020, or 1999? What year did Oxygen X get its correct license? You have less than 5 seconds. Let's see who is leading. The data says the highest percentage is 2021, 39%, 2024, 32%. Let's see what the correct answer is. And the correct answer is 2024. A lesson to learn here. The most popular answer isn't always the correct answer. Congratulations, Kelechi. Kelechi, I hope you are not the one playing this game, Kelechi Ibe, because you are not allowed to.
No, I'm not the one.
Congratulations. What was our most recent brand announcement? A, launch of a new product. B, ISO certification. C, announcing a new MD. And D, new location alert. Less than 10 seconds for you to put in your correct answer. And the time is up. Let's see what the data says. The highest percentage is 43%, launch of a new product, ISO certification 36%. Can we please reveal the correct answer? And the correct answer is ISO certification. Again, to let us know that the most popular answer is not always the correct answer. Let's see who's leading the scoreboard. Okay, we can see Kelechi is not Kelechi Ibe. Okay. All right, they don't want to Kelechi Ibe to collect their glory.
I'm rooting for the Kelechi though.
For the Kelechi. Congratulations. Final question. Become a member of, when you sign up with Oxygen X, you become a member of Dash, X Nation, Oxygenator, Oxidation, and X Community. So long as there's no ex-boyfriend or ex-girlfriend, we're good. Let's see what the answer is from the populace. X Nation 32%, Oxygenator 27%, Oxidation 7%, and X Community 35%. And the correct answer is, drum roll, X Nation. Distinguished ladies and gentlemen, by virtue of being here, you are a member of the X Nation. A round of applause for yourselves. Congratulations. And thank you very much for participating in our quiz. Chipurem Chukuma, Olaleko Obushola, Jonathan Orefuwa, Frank, and Kingsley Egesi. Congratulations on being our top 5 here. I want to confirm, is this our general leaderboard? Or this is just for the final question? But like we did say, for everyone who has participated, we are going to be giving you, or contacting you with your gifts. And this, of course, available to the top 100 people who were able to participate in this. So congratulations. Thank you so much. Can we please an applause emoji? I want to see your clapping hands in the chat box to applaud everyone who participated in this, particularly our champions. Thank you very much for being here. Okay, we will now go ahead with an explanation of some sorts. We've given you a clue as to what we do here. Just to sort of summarize. Well, thank you. I can see all the applause in the comment section. Thank you very much, X Nation. And now to talk to X Nation about some of the things we've just shared with you in a very, very short address. Please join me as I welcome the manager here, head of sales, Oxygen X. Welcome with me, Oyebimpe. A round of applause for her. Oyebimpe Adeni Sanusi, as she comes to quickly address us, and then we will take your questions.
Thank you, everyone.
Please talk to X.
It's been such an insightful session. Thank you, Kelechi. Thank you, Olive. Thank you, Stanley. I really enjoyed the session. Honestly, I didn't want it to end, but then again, we have to move on. Yeah. So the question and answer, the quiz session has opened our eyes a bit to what we do here at Oxygen X. So for us at Oxygen X, we are a subsidiary of Access Holdings. Like we rightly showed you guys, what we do is consumer lending. We give loans to salary earners, business owner. We have different product offerings, right? We started our operation in 2024. We got our license in 2024 and we started disbursing in October 2024. So I will quickly run you through our offerings. I think I have just 5 minutes. So I'll go to the very important thing that matters to everyone on this call. Okay, thank you very much, Olive. So what do we do in OxygenX? Like I said, we have different range of offerings, from our cash loans to our SME loans, to our buy now, pay later loans, and to our investment. We have other products that, they're still work in progress. But for now, what we've sent to the public, what we've built currently are these 4 products that are currently in the market. So quickly on our cash flow, what do we do? It's basically for our turnover customers, those that, do not earn salaries. You use your personal account for your turnover, for your daily activities, for your business activities. Your business is not registered. We put you in that bucket. Then for our salaried customer, which is under our cash loans, also we have a tenure. Our tenure ranges between 3 months to 24 months, as the case may be. Then also for our SME loans, this is majorly for our working capitals, for the SME businesses that have their business registered. Either your business is a business name or is a limited liability company. You're welcome to speak to us, and trust me, we are going to answer all your financial needs. Our products are tailored to all of your needs. Then for our buy now, pay later, this is just simply asset financing, as most financial institutions call it. From your electronics to your solar panel to generators to, just name it, to your gadgets. You want to buy the latest iPhone 17. What we do on that platform is to pay your vendor. You can bring your invoice. You can go through our registered vendors. We pay on your behalf with, of course, T&C applied. We pay on your behalf to the vendor or merchant, and you're able to take the products home. There you pay monthly to OxygenX. Then also for our investments, we have, you can invest with us with minimum of 50,000 to, we don't have a capped maximum. You can invest as much as 1 billion. We have the capacity, to also give it back as loan. And our interest rate for all our offerings are very competitive. Trust me, our customers are also saying that they're giving the good feedback. So, it's now your time for you to join this stream. Like we said, OxygenX, what does oxygen mean? We give breath to that part of your finances that is suffocating. We are not like, every other financial institution that wants to drain the life out of you. We are saying, come to us. We want to help you. We want to be your financial partners and want to be your reliable financial advisors anytime. And this is part of it. We don't just take from you, we're also giving back to the society. And this is the reason for this session. Thank you very much. I think that's the end of my, So in case you want to, Olive, one more thing. In case you want to reach out to us, our number is displayed on the screen. And also, I'm sure Olive is going to give you more information on how you can contact us. And I can assure you that one of our representatives will be waiting to take all of your questions and meet your financial needs. Thank you very much.
Very much, Oyebimpe, for that explanation. We also do have a QR code. If you want more information, please scan the QR code that will be displayed on your screen. You can also use, when you're, the access code is X Nation, and agents will reach out to you and help answer whatever question you may have, because we are now part of the X Nation. So X Nation, one word, that's the access code. So please, if we can display the QR code at some point, please scan it. But let's now get into the Q&A. I'll be starting with the question here. Someone says, what if I were to be managing a property? All right. Someone says, what if I were to be managing properties for persons not resident in Nigeria? The various tenants pay to my account, and I forward the rent to the landlord after deducting my 5% management fee. How will the taxation apply? This is from Ogenetega Emokwero. Kelechi, can you please take that?
This question highlights the importance of actually keeping your records, because you're not supposed to pay tax on every inflow that comes into your account. You're only supposed to pay tax on your profits, which is derived from your revenue. And as an agent, the entire money that comes into your account is not your revenue, it's not your turnover. It is only your commission, whatever the percentage is, that's your revenue. So what you need to do is, when you are preparing your books, you need to then state category clearly what your revenue is, and you don't have to, it's not the entire amount, but like I said, just your commission, that's your revenue, and then that's what you now use to determine whether you hit the threshold. So that you got 100 million or 200 million in your account, that's not the basis for taxation. It is whether that your 5% agency fee or commission adds up to 100 million, and that's what now determines your tax basis.
All right, thank you very much for that. Another person, if a number of people are asking this, so I'm going to merge it into one question. This one is saying, as a lawyer, how do I invoice my clients? And there's some freelancers who have asked that as well. How much percentage should they add, or should they put this invoice is exclusive of all taxes and deductions? Let's have Kelechi, then I'll come to Stanley for the next two questions.
Okay, yeah. So whether you charge tax, again, depends on whether you're a big business. So under the Nigeria Tax Administration Act, a small business is a business that earns between less than 100 million, right, in a year. Now, you don't have an obligation to charge VAT if you are a small business. So but if you are a law firm, if you're a professional services, so that's the general rule, but there's a carve-out for professional services firms. So if you're an accountant, you're a law firm, you are a pharmacy, a hospital, you don't qualify as a small business regardless of your turnover. So it means that you need to charge VAT for your services if your services are VATable. Now, how do you know whether they are VATable? You need to look at the law, but we don't have to look at the law if you use TaxStream, which is the product we built that sort of helps you, guides you. Once you input what you want to do, it will tell you the VAT rate, whether it's 0% or exempt or 7.5%, because there are a lot of things. So you can miss it. You can apply VAT when there shouldn't be VAT. So instead of cramming all of that, an AI-powered invoicing system that we built helps you determine the tax applicable. But yes, you need to first determine whether you are a professional services company, which means at all times you need to charge VAT. That means you need to register. And if your transaction is VATable, then as a law firm, yes, it's VATable. You charge 7.5% on top of your professional fee, and your customer pays the rest. But if you're a pharmacy, for instance, pharmacies, your tax rate is 0%, your VAT rate is 0%. So you don't charge, you charge VAT, but your VAT is 0%. Now, 0% VAT is different from VAT exempt. There's a difference, and I think Stanley spoke to that. One, you can claim the input VAT, the other, you can't claim the input VAT. So it depends on your business. If you sell basic food items, diapers, tampons, and a lot of those kinds of things, then those are also zero rated. So you don't need to charge VAT at 7.5 to be 0%. So you need to know what you're selling first to know whether there will be VAT or not. And that schedule is there in the law, but most people might not understand it, which is where TaxStream, comes in.
All right. Thank you very much, Stanley. This one, someone says LIRS, and Wala Babalola says LIRS and NRS are asking for the same tax. Stanley, please, can you shed some light on that?
So NRS does not, and LRS have different taxes. So you are paying your personal income tax, the one that you pay personal income tax to your LRS, that is your state. For VAT, for company income tax, those ones go to the NRS, the National Nigerian Revenue Service. The LRS handles your personal income tax. So for a lot of people are going to be dealing with mostly your LRS. And that is why they are coming out now with the fangs of the law to come out and tell you that we're coming for you, especially for people in Lagos State. I think the state that we're going to have some of the most enforced compliance will be Lagos State. And then maybe Abuja will follow suit, and there's some other states that are trying to see the way that they can generate revenue from this. But if you're in Lagos State, please try as much as possible to be tax compliant.
All right, thank you for that. So we can take a few more questions before we wrap things up. Someone says, please speak on stocks and mutual funds. Are they taxable, Stanley?
Yeah, so stocks and mutual. So if you're buying mutual funds, you're paid an interest. That interest, there is a withholding tax. That withholding tax is all the interest that you have paid. It's just like when you go to the bank and do fixed deposits, you are charged a 10% withholding tax. That 10% withholding tax is on your interest. So for example, if your mutual fund is promising you 10%, and you have put in 100 million, 10% of 100 million is 10 million, or you have put in 10 million. 10% of it, of 10 million naira, is 1 million naira. Am I correct? Yeah, it's 1 million naira. So if you are going to charge you 10% on your interest, so they are going to charge you 10% on the 1 million that you have made. So that comes up to 100,000 naira. So that is where your taxation comes in. That is all the tax that you pay. But if you have stocks, you are going to pay, and you have made profits, you are supposed to pay CGT, capital gains tax. Your capital gains tax is only limited to if you have, it's limited to making a profit of over 120 million. What's 120 million?
In sell for 150 million.
150, is it 120 or 150?
150, then yeah, it's 150.
150 million in
150 million.
You sold for 150 million in a 12 months period, or that your profit is over 12 million or 10 million. I can't remember the particular figure within that month. So that's where you will now fall. That's where you now say, okay, you are paying capital gains tax. But most people do not even. Another thing is that 80% of people do not fall within that category. Again, they don't fall within that category. So you have yes, you're going to pay capital gains tax, but that is only if you have 150 million naira that you have paid within 12 months. And most people do not have 150 million naira profits they've made from their stocks. So for you, most times you are not going to pay any extra income. And if you reinvest that money again, if you're in the stock market and you reinvest that money, you are not paying any form of tax. So your money just keeps growing.
Okay,
and investing.
Thank you very much for that, Stanley. We'll take a few more questions. We are wrapping up in under 10 minutes. So before we get to the next set of questions, we want you to please scan a QR code. And we know that there are many people who have sent in questions. We want to get a sense of how this was, this webinar came across for you, how you were impacted by it, so that when we're organizing another one, we can take all that into consideration and do better. So a poll will come up at the end. Please, we want to appeal to you. That's the only thank you we want in return, that you please kindly, yes, that's the poll. So if you can, it's the new tax law webinar survey. We have just 7 questions. So how helpful was this webinar to your current tax situation? So A, very helpful, B, somewhat helpful, C, neutral, D, not helpful. All right, so please. The second question, I'm sure you can see there. Did the session meet your expectations, exceeded expectations, met your expectations, fell short? There it is. And which part of the webinar was most valuable to you? Personal tax insights, SME tax compliance, tax mistakes to avoid, and Q&A session. Question 4, was the information shared easy to understand? Very clear, slightly confusing, very confusing. After this webinar, how confident are you about handling your tax obligations? A, very confident. B, somewhat confident. C, still unsure. And what support would you like next? A, loan financing. B, tax advisory. C, business growth support. D, more educational webinars. If you think this was not enough and you want more, please let us know, or as many as you want. How likely are you to recommend Oxygen X to others? A, very likely. B, likely. And C, unlikely. Thank you. And I think the last thing I'm going to ask of you before I take the final set of questions will be the QR code. Please, if you can scan the QR code, I'm sure you can see it on your screen. I'll just give you 30 seconds. I'm sure everyone should be done by now. I'm so sorry for those who joined late. Okay, I joined quite late due to other official responsibilities. Is it possible that we have a record of the session or have another session organized? I have something better for you and I'll announce it at the end. Okay. Let's now go back to the questions and take a few more questions before we wrap things up. Someone is asking here that the person that works for a foreign company and your boss pays you in cryptocurrency and then you convert it and use, how will you be taxed? Kelechi, do you want to take that?
Sorry, you work for a foreign entity that pays you in cryptocurrency.
And then it converts to Naira.
Yeah, so actually, your tax is based on Naira. So even if you earn your money in dollars, normally you're supposed to convert it to like, you're supposed to calculate the tax in Naira, not that you convert the money to Naira. So let's say you earn $2,000 a month. You need to convert that $2,000 to Naira for the purposes of calculating your tax. Then run because the tax bands are Naira based. So it's the first 800,000 at 0%. So you can't run the tax table through your dollar figures. So you need to first convert it to Naira, which is also interesting because then you use it now depends on what rate you want to use. The preference is that you use what we call the NAFEM rate, which is the autonomous foreign exchange market rate, to convert that. It's the same thing with crypto, right? So crypto will most likely be paid in maybe BTC or USDC or USDT or whatever, a stable coin. Most likely always a stable coin, which is USDT or USDC. So it's the same logic. You use a conversion figure, which if you're getting a stable coin, you need to first convert that USDC or USDT to a Naira figure, whatever the basis you use for that conversion, and then pay your tax, run your income through that amount. Now, there's an important thing to say. Now, you only pay tax in Nigeria if you're earning that money as fees or salary or whatever. But if you're earning that USDT or USDC or crypto or whatever in form of dividends, right, from an investment offshore, that money is tax-free if you bring it through your DOM account in Nigeria. Let's not crypto now, like USD, like actual dollars. If you bring in dividends earned abroad into Nigeria through your DOM account, you don't pay any tax at all. If you earn interest outside of Nigeria and you bring it to your DOM account, you don't pay any tax at all. I just thought to mention that since we're discussing foreign earned income brought into Nigeria. Those are some interesting things that most people don't know. So if you use Bamboo to invest or one of these things and invest in US stocks, and you get a dividend, that income is not taxable in Nigeria as long as you bring it in dollar to your domiciliary account.
Thank you very much. Quickly, Stanley, someone's asking, please, can an employer deduct or remit an employee's taxes without the employee's tax ID? I have a situation where the employee requests for his tax ID from his employer, but was told to visit his resident state tax board to apply for his tax ID. So is it possible to remit taxes without tax IDs?
So, you can't remit tax without tax IDs. You must have a tax ID. But what has been happening for a lot of companies is that so many people have been, maybe in your former workplace, there's been an ID that has been used to remit tax for you. Please, you can go back and still get that back. A lot of people do not know that they have one. So you can go and get that back and use that to continue if you're still within the same state that you're getting, or you can just go and apply for a new one if you've never paid.
Because they're trying to, I'm assuming in this situation they're trying to get their tax ID from the employer, and the employer is telling them go and get it from your state. But I'm assuming that maybe there's been a tax deduction that has been going on, so they're trying to find out, and have these people really been paying my tax, or since they don't have my tax ID. So from what I'm hearing from you, it looks like that may not have been the case. Okay, let's take another question. How do you advise someone who, due to misinformation, has different business names and limited company with CAC to proceed to avoid defaulting tax?
You can now that you know what you should do, if you want to run as a limited liability company, you should understand what your inputs would be that you need to prepare an annual report, your documentation needs to be a little bit more different. You need to have an audited account. Those are the requirements for having a business, having a company. And then what your liability is that you below 100 million, you are exempted. If you're running your business name, and then that, okay, I'm subject to personal income tax, and then I'm subject to certain deductions that I can manage myself within this framework, then that is different. So just have one or two, so have either of them that you're going to use to run. Or if you have multiple businesses and you're running maybe your business, you're using your business thing for maybe like a professional service that you're rendering, and then maybe you have like a supermarket or like a hotel and you're using a limited liability company for it, then you understand that there is no need having 7 or 8 of them. It will be difficult for you to be able to aggregate that for compliance sake, and it's be costly for you even if you're going to meet like an auditor. You are paying somebody money to go and check 7 accounts that are not really, and I don't think you are Dangote that has too many subsidiaries. So please, at the point where you are, just limit yourself to one.
All right. Thank you, gentlemen, for sharing from the wealth of your knowledge. Any final thoughts? I'll give each of you a minute each, and then I would have a final announcement for our ex-nation.
My final words would be that any opportunity that you find to get knowledge about tax, please take the opportunity. Attend webinars like this where there are experts. Speak to experts. Do not rely on people who have known nothing about tax talk to you about tax. I've seen a lot of misinformation. It's not as bad as it is. There are some bad elements, bad things in the law. I can't speak to them right now, but paying your taxes saves you a lot of stress. And there's an aspect that we've not spoken about on this call, which I want to use 30 seconds to speak about. And it's your tax clearance certificate. If you're a business on this call, make sure you get your TCC now as quickly as you can. Because I've seen people where they have a business deal, and one of the requirements for being considered is that you need to get a tax clearance certificate. And that's when they now start running helter-skelter, trying to get the TCC, and they can't get it in time and they lose that deal. So whatever you're doing, fix your compliance issues now, get the TCC. And we've tried to do that at TaxStream. Actually, at TaxStream, we've built a technology, an AI-powered technology that allows you to connect your bank accounts, and we use your financial data to compute your taxes and file your taxes for you automatically. You do very minimal work. We also have an AI-powered invoicing system that allows you describe what you're selling, and the tax rate comes up automatically, and it issues your invoices and tracks payment and files your return monthly. You will never miss any filing deadline with TaxStream. So it's spelled TaxStreem. You can follow us on all social media and make compliance very easy for yourself, both from an accounting perspective and from a tax perspective. Thank you. And it's good to be here with OxygenX as well.
Kelechi, you share videos about tax on YouTube as well, right?
I do. Thank you, Olive, for reminding me. Yes, so you can check me out on my name is Kelechi on YouTube, and then you can also check out TaxStream's YouTube and social media page. We post a lot of videos where we explain some tax concepts, how to invoice your clients, how to track payments, both on my personal YouTube, Kelechi, and on TaxStream's YouTube at TaxStream, TaxStreem.
All right, thank you very much, Kelechi. Stanley, as you give us your last thoughts, closing out, I'm going to sneak in one teeny weeny question because too many people have been asking. Those who do small businesses like makeup artists, they're asking when they're sending the invoice to their clients, should they tax their clients? So as you add that, then give us your own closing thoughts.
Okay, for everyone that is on the call, things are not as bad as you are, and I'm going to guess, using the estimation of what the data says for Nigeria, 80% of you do not need to bother about going to file, which comes up to the question you asked, going to invoice your person for tax, VAT and all that. Most people are not earning more than 50 million, even 20 million per annum. That's even a fast stretch. Some of them even like 10, 50 million naira per annum in their business. So for makeup artists, even for very big makeup artists, within the confines of maybe say purely makeup artists, aside maybe like coaching and all that things that they do, it's purely makeup artists that they are maybe some of them have even like 50, 60 million naira, as big as they are. There's smaller people who have that threshold. So you don't need to really bother. But once it comes to the taxation thing that we are speaking about, if at any time you are contacted by anybody, one is that there are going to be people between the year that are going to come and front themselves as a form of tax collectors. So you should be aware of them. Now that you have that knowledge, ask them where they are from. Are you from the government? If it's national NRS, which is from the government, are you coming to ask me for VAT, or are you coming to ask me for development levy or company income tax? I'm not a big business. I'm not supposed to pay that. If you're coming to ask me for my personal income tax, please show me where I'm supposed to go and file. They say I'm a small business, see how much I'm earning. They say maybe I'm tax exempt. I don't even earn up to 100,000 a month, or I've paid so and so. I'm going to pay at the end of the year. I'm going to complete this at the end of the year and pay. So with that knowledge, you'll be able to avoid fraudsters that might come to you, one. And then you too, as you are planning to expand your business, please gain, as just like Kelechi said, gain as much knowledge as you can. Keep your records. Try to have, like, even if it's a small record, keep receipts. Because when you meet the taxman, you don't have, it's not based on like, trust me, bro, please just trust me. That's not how it works. You need to show receipts. You need to show evidence of anything that you're making deductions for, or for any transactions that you want to claim from the tax authorities. So as much as possible, learn to do bookkeeping for your business as you're expanding to a small business. And please gain as much knowledge as you can. You can follow me at Online Banker across all social media, one and only Online Banker. Peace out.
Online Banker. Joining us, Stanley, Onuorah, Online Banker, and Kelechi Ibe, the founder of TaxStream. Thank you, gentlemen, for helping us understand tax better. You can follow them on their social media platforms. Please, we'd like to ask that you follow us on all social media platforms at Oxygen Africa, Oxygen X Africa on all social media platforms. But we have LinkedIn. LinkedIn is just Oxygen X. But please follow us, because that is where we'll be sharing content, more content about tax, so that you're properly informed as well. Also, to answer the question, those who came in late, those who want the recordings, and those who asked questions that we couldn't take, I promised you that we're going to do you even one better. We're collating all the questions, and we're going to do them into a newsletter. And by virtue of you subscribing to be a part of this, we know that you have in some measure become a part of the X Nation. So every member of the X Nation will get a newsletter where Kelechi and Stanley would have answered these questions. We'll send the newsletter out, and along with the newsletter that answers all these questions, we'll also send you a link to the recording of today's interview in case you'd like to re-listen. So I think we should give Oxygen X a loud applause. I can see the applause. Keep it coming. Thank you so much. And let's say thank you to our incredible hosts, our incredible panelists, and once again to our host, Oxygen X. Thank you so much for doing this. My name is Olive Emodi, and you can follow me as well on all social media platforms. It's been an honor to do this, and I look forward to us having more insightful conversations and being ready. I think the prayer is that you become within the tax bracket. For those who feel that they are not there yet, so we get there. The prayer is that your money is increasing, even though you are paying more. But you know that money is increasing, you're paying tax, and then we can hold our government to account to be able to do the things that they have promised to do, because our money, that's when you can say, what are you doing with taxpayers' money? Thank you so much. We have a few more minutes before we officially end the live. So if you have more questions you'd like to put, please quickly put them down. We'll be ending the live in under 2 minutes, and then you'll get the newsletter. Once again, thank you very much, everyone. Kelechi and Stanley, you can say your thank yous and sign out.
All right. Thank you so much, everyone.
Thank you, everyone. It's a pleasure to be doing this with you guys and with this Oxygen X team. See you next time.
Thank you very much to Oxygen X.
And thank you, Olive.
Thank you for in me. So we'll leave this up for another 1 minute, after which we'll end.
Thank you very much, Olive. Thank you, Kelechi. Thank you, Stanley. Thank you.
All right, in another minute we'll turn this off. Feel free to exit if you've dropped a question, but if you'd like to drop a question, you can quickly drop that before we end the live recording. Thank you very much. We'll see you around, maybe in the next webinar or at the office of the taxman. Bye-bye.
Bye.